What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is October 18th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I want to dive into the seismic rally we've seen in Bitcoin's price over the past couple of days and really over the last month, as Bitcoin has rallied over 40% in a single month, one of the best we've seen since back during the May correction. And I want to go ahead and dive into where we are within the broader context of the Bitcoin cycle, and not so much talk about timeframes, but return analysis in this case. As many people might debate about when the cycle top is going to come in, we need to understand in this case what's a reasonable target range for valuations. So without further ado, let's go ahead and dive into the conversation, guys, and analyze the broader market. Starting off here, though, we got to talk about the journey of Bitcoin. No matter if you're looking at the standard or logarithmic chart here, we've gone through an incredible journey in Bitcoin's price. We rallied all the way back here in April towards $65,000, nearly right at that even level 65K. And came down and had one of the most bloody months in crypto markets, a 35% downturn back in May of 2021. And all the while, many people had the conviction that we had just started the bear market and that markets were going to go down. And even though I can understand that sentiment with all the euphoria with Dogecoin and with TikTok investing, to be fair, we stuck to our convictions that this was a mere mid-cycle correction. And look at where we're at right now, guys. We had not only pulled back down towards $30,000, but in a mere 4 months, starting off here in July, we've gone from around 30K to 62K in Bitcoin's price. We've more than doubled in price and revisited back up close to those previous all-time highs around 65K. And it looks like we're pretty much inevitably set to cross to that 65K level. I think at this point, everyone's pretty confident that we're no longer in a supposed bear market, right? Now, at the same time, we don't want to be irrationally exuberant, right? We want to be confident that there's enough momentum and enough reason for buyers to come in to push prices above the 65K level. So let's go ahead and actually give ourselves a bit of a roadmap here of expectations in order to not really per se shoot ourselves in the foot and get our expectations too high. So let's first start off by taking a look at Bitcoin's market cap. All right. So, when we talk about all these different price levels in this case, people tossed 50K, 100K, 200K, 250,000, $1 million. Everyone's going to give you different price targets to shoot for. But we can utilize market cap, we can utilize price, and so long as we look at the long-term time frames, we can start to get a really clear picture as to where things could possibly go, at least a rational degree of where they could go. And we want to kind of keep our estimations as conservative as possible in regards to previous history. So let's go ahead here and think about where we could see Bitcoin's price going to. Well, what we're looking at now in the sense is market cap, right? We're sitting around in the sense of Bitcoin's market cap solely back above that $1 trillion valuation, right under 1.2 trillion at 1.17 trillion. You can see it here on the chart here. We've got it right there. So again, if we follow in line with this idea that we're going to be having expanding cycles, we're going to see longer time frames in the cycle, or even if we get it in a shorter time frame, you've really got two scenarios here in this case. One that either meets with the expanding cycles and comes in line with this midpoint line where we faced resistance here, and also made support back here, right? You can see this midpoint line is also where we had really the inflection point back in 2017 where things rose up in a very parabolic fashion in a very short period of time, right? So this is really the conservative estimate here of reaching a $4 trillion valuation sometime in November 2022. Now, if we were to get a more optimistic expectation here, I would say we're still going to see a 250% return in the most optimistic scenario, but in a matter of just a couple months, going into Q1 or early Q2 of 2022. Now, why is it in this case that I'm confident we can see a 250% move, which would effectively leave Bitcoin not only at a $4 trillion market cap, but also a price figure of roughly around 200K? Why is this? Well, the reason for this is because when we take a look at history, right, between that optimistic and pessimistic scenario, both of them generally lead to $4 trillion in valuation for Bitcoin, or 200K in price. So let's take a look, for example, here, right? The previous cycle, right, once we came past this midline towards the top of 2017, we got above the overall midway line here. And what we saw from that point on, from there to where we are there, right, but a 432% return. right? Now, again, as we talk about, no matter if you believe in expanding cycles or not, we generally go through decay in each cycle, meaning that we have less returns than the previous cycle, right? So for us to estimate a 256% return, not only not from the midpoint line, but from where we're at right now, which is below that midpoint line, I think is a very, very conservative ask in this cycle. And it's going to play in when we consider the $4 trillion valuation for Bitcoin into our idea of an overall top, and the overall value of cryptocurrencies around $10 trillion by this cycle, right? I know it sounds crazy with Bitcoin at 1.6 trillion, and when we consider altcoins, it's slightly more of a higher valuation as it's the entire altcoin space, right? We'll talk about how it actually is pretty reasonable in the sense of percentage multiples and considering what we've seen throughout history. But again, we're considering this idea again that somewhere between the most optimistic scenario being Q1, Q2 of 2022, setting in those all-time highs at 200K, that would be more of a parabolic euphoric rally, but also the possibility that we could see this go all the way towards November of 2022 if we yet again, for a third time in this cycle, hit that midpoint line as the peak for the cycle around 4 trillion in November, right? Again, time frame estimates are something that get debated about all the time in crypto, but what we should first set is conservative time frame estimates with optimistic price expectations, right? And that gives us this ability to come here towards around $4 trillion in the coming year, no matter what time frame we're talking about, okay? So next up here, let's take a look here at total 2. Now this is the total altcoin market cap. So it's excluding Bitcoin's market cap out of the equation. And what's really interesting is that we've seen here yet again this similar pattern here where we've been able to make exponential returns in the altcoin space from the base where the market had bottomed out from the bear market and started the next cycle, right? And right now we're sitting a little bit above Bitcoin in the sense of total market cap, around $1.32 trillion. And we have an estimate here, as crazy as it might sound, that in the next coming months, we are going to see altcoin market cap come up here towards around 7.5 trillion at the most optimistic level. And I know that that sounds like a big, big leap of valuation increase. How can we be so confident that something like this is going to happen? Right? Well, according to history, if we actually shrink our chart here, we can see that the multiples are much smaller this time around versus the previous cycle back in 2017. Back here in 2017, we had a 1,304,195% return in altcoin market cap. Absolutely insane stuff, right? Definitely not going to be making returns like that yet again because, as you all know, as we talked about, we see decaying returns in each cycle, right? We went from a $34 million market cap to nearly $500 billion, around $474 billion. And that kind of multiple is just not going to be able to be achieved when you're at a base valuation of $35 billion. It's much higher in this case, in fact, nearly 1,000 times higher than $35 million, right? So considering that, right, we're expecting lower multiples, but this time around from base to new all-time highs, we're just expecting a 21,000% return. I know that sounds absolutely insane, but we have to consider a couple things. A lot of that market cap increase can come from new coins launching on the market. And the key thing we need to understand, guys, is that valuations do not speak to true wealth. Market cap, in this case, is something you should analyze. I disagree with people who say you shouldn't analyze market cap because people are watching it and traders and investors are watching it when they want to materialize profits. But that's the key thing. Your valuation of your crypto portfolio is materialized until you take profit. And that is the same with any other asset market. So that's why, again, if you're more active in the market, I, again, try to focus on trading, buying in at the discounts, those 70-80% corrections, and generally starting to take profits when we get towards signals of an all-time high in the market and a market cycle top, right? So again, we've already seen here that we've gone from a $35 billion market cap just in March of 2020, from last year, a little over a year and a half now, towards where we are now at $1.3 trillion, right? That's a 3,400% move here in this case, right? But as we continue to move higher, it's very realistic that we could reach towards those much more euphoric peaks as we get more parabolic, as buy-side pressure picks up, and as an institutionalization of the crypto space continues to pick up, right? It's really not that far-fetched. And from the previous all-time highs, we're really only asking here for a 1,500% move. Again, another big even level here that investors are watching. So again, I think that overall we're already on this trajectory here, and if we get more euphoric and parabolic, we'll start to ride up more towards this line that we have here, this kind of curved line here, while momentum is going to slow down because we're talking about logarithmic valuations here, right? If we turn that off, you can see here that things really start to get exponential over the next coming months. But that's always the case here when analyzing price. It's the reason why when we took a look at Bitcoin's chart, right, and the standard chart, this looks absolutely crazy, but it's also how it looked back here, right? So again, just something to keep in mind, the sense of perspective here for markets. Now, let's go ahead and take a look at total market cap. This is aggregating Bitcoin and altcoin market cap, the entire cryptocurrency space. Right now, we're sitting around $2.5 trillion, right near that nice even level, $2.5 trillion. We're a quarter of the way there towards our ultimate goal for the cycle of $10 trillion. Now again, how could I be so sure that we could reach something like $10 trillion? Sounds too good to be true, right? Well, if we take a look at the previous cycle, we went from a bottom low of the market at $2.1 billion all the way up to $761 billion. If you take a look at the date range and price tool, we can see here that when in a matter of 36 months, clean 36 months in the cycle, so a year and a half, 3 years, my apologies, 3 years in this case, from bottom to top, we saw a 35,000% return in valuation. If we take a look from the bottom here to this target, right, we're talking about less than a third of those returns, around 11,000%. From the crypto market's bottom valuation to its top valuation. I think this is incredibly doable, guys, right? Considering the decay in returns, the longer time frame. Again, we're keeping our estimations conservative that not only would we see Bitcoin topping out in November of 2022, right, the expanding cycle theory for Bitcoin, but also that we'd see altcoins top out a little bit later on. And that's an important thing we'll talk about as well here in just a moment. But, again, $10 trillion, right? Considering for the previous all-time highs here, right, is merely, in this case, if I get it right exactly there, we're talking about 12,000, 1250% return, right? 1,250%. Not too crazy. Not too much of a big ask at all. And it shows us here again whether in this case we have something that breaks past this midpoint line, or we even just ride up against this midpoint line as we go through the logarithmic chart here in valuation. Again, doesn't need or require much momentum because in logarithmic valuations, we're really starting to charter towards higher levels. And again, there can be so much fraud. A lot of that valuation isn't real at the end of the day. And a lot of people are going to be walking away, unfortunately, empty-handed because they don't learn to take profits. But if you can ride this kind of wave and make these kind of returns and lock in profits, it can go a long way in helping you guys to grow your net worth and grow your portfolio in the long run. Right. Either way, though, even after these corrections, if you're more of a hodler in this case, and you're not really an active trader, it's not a big deal. I mean, overall, we're talking about this market going from $2.5 trillion to $10 trillion possibly. That still means there's a lot of great room for some great returns if you're in the right place. So, again, now let's go ahead and talk a little bit about one important dynamic here. It has to do with altcoin dominance. Now, right now, I understand a lot of people are concerned right now who might be holding altcoins. It's been, in this case, 6 weeks of altcoin dominance going from around 60% down to 53%. And we talked about on the channel in this case that even though we were hoping for a breakthrough here, either way, altcoin dominance is not in a trading scenario. It is not, in this case, in a favorable scenario to go out and start switching between one coin to another, going from, in this case, your altcoin positions to Bitcoin. And the reason I emphasize this is because of the way the technicals are built up right now. We do not want to find ourselves 2 steps behind. What do I mean by this? Well, if we take a look here at altcoin dominance, we can see that we had a long-term line of resistance back here from July of 2019 that held down altcoin dominance 3 times before we had the seismic 4th rally here in this case towards that previous line of resistance, broke through it, and have now started to treat it as support. This is a very, very significant level, the only likes of which I would be bearish on if dominance significantly breaks through and goes down below 51% or 50%, right? And we're already at around 53% at the moment. Right, we're coming back down to that line, and I think, even though again, don't take this absolutely for how it's drawn in this case, it's just a general estimation here. I think what's generally going to happen is no matter how it actually prints on the chart, we're just going to generally push sideways here on the chart throughout the coming weeks and months, and generally hold up with Bitcoin in the broader altcoin space, and then pop up here in December of 2022 after Bitcoin sets in its all-time highs. It's again, if we have expanding cycles, this could happen earlier, right? We're going to eventually break past those previous all-time highs, pop up, and see altcoin dominance tap up towards another big even level of 75% here, 3/4 of the market. Now, an important thing to understand there, and again, we've talked about on the channel before, is somebody might be saying, Nick, in this case, if we're estimating that altcoins are going to 7.5 trillion and Bitcoin's going to 4 trillion, that takes us towards well above the $10 trillion figure. It's 11.5 trillion. How did you come up to that math? Well, that's not exactly what I'm claiming here. What I'm claiming is that there's going to be a point where Bitcoin holds 4 trillion of the market, right, and market cap. And then inevitably afterwards, as Bitcoin starts to decline and lose some of that market cap, altcoins will suck in some of that liquidity and valuation. And there's going to be a point, and I think it's going to happen here, at this case, whenever this event is, when altcoin dominance owns 75% of the market, where altcoins own $7.5 trillion of the market, and Bitcoin owns 2.5 trillion, roughly speaking, right? It's not going to be exact in this case, but this is a general range we can work with here to get some decent estimations of what to expect going forward. And again, we set really conservative time frame estimates. This could happen in the next 6 months, guys. It can be really compressed. I will say, though, to be completely fair, right, even though on the logarithmic chart it's not that much in the sense of valuation gain, I really don't think we're going to be able to see the same euphoria here that we saw back in 2017 or in previous cycles when it comes to reaching targets like $10 trillion. That's the one thing I really disagree with in regards to a lot of people in the space, guys. So many people have a problem, and I tweeted out about this the other day that, I was talking about the good calls I've made and the bad calls I've made. And one of the good calls I made is that, in this case, we're not in a bear market yet, right? What we just talked about back in May, which was good. It was a good call in this case. We're back to the previous all-time highs. This is pretty much clearly not a bear market at this point. But on the other end of the stick, a bad call that I made is I expected back in 2018 that a Bitcoin ETF was right around the corner, that in 2018 or 2019, we were going to get one in the market and it was going to change the game and bring up crypto valuations to levels the likes of which we never seen. Well, even though markets did increase, to new valuation highs, we just now saw an ETF. And the thing that I learned over the past couple of years is that people's time frame estimates are usually so short term, whether it's on the positive end or the negative end. We have to expect that things are going to take longer than we previously assumed they would, right? And that's exactly, to me, what this chart screams. Whereas in the last cycle, we were hanging below this midpoint line and had a secondary phase where we blew past it. In this cycle, it seems like we're having exacerbated rallies, right? In this case, where we're coming up, touching the midpoint line, which we didn't do back here, touching the midpoint line, which we didn't do, right? Until we get here to test it towards a third time in this case. And I think it showcases here as we have these golden lines, the decaying returns over time, right? If we were to see Bitcoin, for example, I'll move my drawings here, right? If we were to see Bitcoin make something like 10K here within the next coming months, right? Let's say towards April, this is what you're asking for here. You're asking for Bitcoin to charter, from, or actually not just Bitcoin, the total market cap, to charter from 2.5 trillion all the way up here to $10 trillion, right? Does that seem reasonable? It could happen. Crypto's crazy sometimes, but I don't see any catalyst that's going to lead crypto markets from becoming $2.5 trillion market to $10 trillion in a matter of just a couple months, right? Even with as crazy as market cap can get in cryptocurrency markets. But again, as we focus here overall on the altcoin dominance and overall with the total cryptocurrency market and these estimations, it gives us a good framework to work with. But one thing I wanted to talk about today, guys, is diving into figuring out what are going to be those next plays to watch in the market. There are a ton of different plays in this space, and as much as we're generally allocated towards the DeFi space, one space that I've started to allocate more and more attention towards is the overall layer 1 protocol sector within crypto. And one of the places we want to talk about is our sponsor for today's video, and that's Nervos Network. Now, you guys have possibly heard about Nervos before. It's a layer 1 blockchain protocol that scales through a variety of technologies like side chains and state channels that allows for anyone to utilize Nervos as a core knowledge base, in this case, or CKB, in order to be able to have a strong proof of work network that has data security on top of the base layer of transactions and can scale practically infinitely through a variety of existing technologies that already work here today that allow for a layer 2 form of scaling. So I want to go ahead and give some time here to talk a little bit about Nervos and why, in this case, I think they're one of the interesting protocols to watch. In the sense of the overall kind of valuation in this case, I think they're one of the few plays in the market that really hasn't garnered the full range of valuation like we've seen with Cardano or Solana. So it's still a little bit in the shadows here, in my opinion. It still has a lot of, publicity still to be gained in this case as a project. But the overall concept to me, similar to Cosmos and some of the other layer 1s, is really exciting. I think that overall this idea and focus towards interoperability between various networks that can build on top of this common knowledge base, or CKB, is really, really exciting. Now, there's a couple major things here that put Nervos as a network in a really solid position. Not only its heavy focus on interoperability, in this case composability, to be able to operate between different chains and interact between different types of side chain solutions, but outside of it as well, the already established developments that they have within the ecosystem. So one of them, for example, is their bridge, in this case, the Force Bridge, that will allow people to actually bridge assets from Ethereum's network, in this case, so ERC20s, into the existing Nervos network in a variety of different sidechain ecosystems, right? So you're able to actually bridge in your assets into the Nervos network. And this is really, in my opinion, one of the critical things in this case in order to actually start fostering liquidity within these ecosystems, right? It's one thing to have a great layer 1 network, but if you can't move in some of the existing valuation, especially for a network that's focused on interoperability, that'd be a big issue. And luckily, in this case, Nervos has already got that established. Outside of this, well, one of the other big things outside of the Force Bridge, which again you can go utilize today, is the UTXO Alliance. So this is something where, again, similar to Cardano, Nervos is utilizing the UTXO model, and this is also similar to Bitcoin, but now we're talking about in the sense of programmability and smart contracts. They've actually joined the UTXO Alliance, where they're working with IOHK, Cardano. I think they're working with a couple other networks as well. They have listed here on the website like Ergo, which is tied to the Cardano ecosystem, right? A lot of different plays here that are focusing on this UTXO model and trying to establish a framework of interoperability in this case between different networks, scalability, and programmability, so that you're able to take assets or dApps and different types of protocols and be able to make sure that they all function as if it was one ecosystem, allowing for a competitive environment that still maintains under a solid framework of interoperability and communication between these networks. So overall, the idea really is interesting to me, and it's good to see that Nervos has been able to bake in some really solid relationships with different players in the ecosystem. And the overall approach of Nervos through its scalability is one that's quite unique to me personally, that I haven't really seen many other players taking upon in this case. It's a very practical one that's not focused on future technology that's 3 or 5 years out, but really is focused on utilizing a lot of the existing frameworks, in this case, again, state channels and side chains, to be able to scale out right now, maintain low gas fees, and be able to bring in value towards the CKB, or the central knowledge base for Nervos, which is really that core layer foundation of the network. So if you guys are interested in learning more about Nervos and how it plans to scale and provide interoperability, you should definitely check out the link down below in the description. I think it's one of, again, the layer 1 protocols that I would keep an eye on in regards to the market. There's a lot of interesting players out there in this space. I think Nervos is one of them in the sense of its approach to scaling long term. But again, my big emphasis point here, guys, focus on altcoin dominance here. Don't lose sight on the altcoin market here, because we are not at the cycle top here. If you're like me and you like to just kind of ride the broader cycle waves, in this case from bottom to top, right? I built a lot of our positions back here in November and December of 2020, and I'm still confident that we're going to see altcoin dominance climb higher here. I don't think we're going to set in a lower price range than we were back here. We had many mid-cycle tops in this case, where we had corrections afterwards, but the final top came in here in January 2018, and I think that we haven't seen our January 2018 just yet. So that's going to be it for today's video, guys. If you like this one, consider dropping a like, consider leaving a comment down below. I want to hear from you guys what your thoughts are, whether you agree or disagree, or have some other things that you think we should be focusing on here on the channel. But that being said, if you guys haven't already, hit the subscribe button, hit the bell icon so you don't miss another video. And until the next one, I'll see you all in the next video. Take care, everyone.